Okay, guys, we're online on YouTube. If you guys can see me there, just let me know in the YouTube chat, please. Awesome, awesome. Okay, awesome. Hi, let's start. I can see your chat. That's good. We're good. You can hear me good. We have the screen on. Hi, let's start. Awesome. Hi. So, if you guys don't know me, my name is Hennessy. I've been trading since 2013. I had my ups and downs. We're gonna go through that question we had earlier. So, to answer that question, yes, I gave up almost many times. So, of course, as a day trader, or when I started, I didn't have somebody good to show me what's going on. So I was just following the pumpers as always, and that was my biggest issue is following the pumpers, and I didn't learn anything from them. It was just pumping stocks all the time, and if you got lucky, you make some money here, some money there, and I was up. Like I said, I used to be up a lot because I was trading with big accounts. At this time, I had my business. I sold my business, so basically, I took all my money that I had from my business, like a big chunk out of it, and put it in the stock market. And I thought it's just easy, like I'm just gonna make millions, just seeing these guys. But all I ended up doing was blowing up the accounts, and I blew up my account many times. Like I think I blew up like 3 accounts. Most like the three of them were massive accounts. And then I stopped because I was like, oh, I lost, like that was like a lot of hard money for me. Like that was my business that I built for like 15 years, and I lost like a lot out of it for just not knowing what I'm doing. And it took me a long time just to like you know just to be not just profitable, just to even understand what's going on, like to understand like what is it that's people pumping, and what is pumping in the first place, and why do I see these guys make money and I don't make money, and how come like they say jump here, and when I jump I lose but they make money. But then I started understanding how it goes, like it's like front loading and all that stuff that they do, and they're just basically taking money out of their followers. That's why they had these rooms at the time. At the time, like Discord wasn't even that big. I think it was just we're starting in Slack first, and of course StockWiz was the only thing that's there. That's before like Wall Street bets and all that. Like that's like almost 11 years ago. So it was a different time. And I mean, all the tools we had were basically people selling courses. What's his name at the time was Tim, and what's the name of the other guy? I don't remember. The first two were like the most popular ones at the time. I forgot his name, like Timothy what and whatever. They were like the most known ones, but they were also front loaders, so there was nothing really about it. Like you didn't really have somebody good that would teach you. So I ended up just teaching myself, from reading books to going on YouTube, like trial and error, paper trading. I think I paper traded for almost like a whole year after that, or even more. I think like a year and a half. I kind of like paper traded, and that's what helped me. Give me patience to wait. I mean, think of it like you're watching a market for a whole year and not trading. That takes that teaches you patience. Just be watching the markets, watching the runners. Even that if you're making the money on paper, you would always tell yourself, "Oh my God, I could have made that much or that much if I was trading with real money." But the thing is that easier said than done. So kind of like that's why I recommend everybody, like if you're new to day trading, like paper trade as much as you can. It teaches you a lot of things. Like patience is one of them. Like to have patience in day trading is a big thing. Because the thing that kills most accounts again is like over trading, or jumping in every trade, and that comes from not being patient, not waiting for the next one. I mean, did I lose money in that year? Really, really, yes, really, no, because like there's stocks every day. I mean, if I didn't trade for a year, yeah, maybe I lost that year, but it's not like the only year that I was ever gonna make money. I can still make money today. I can make money next year and the year after. It's okay. So there is nothing wrong with that. So the only thing is that don't give up. I almost gave up. Like when I lost all this money, I almost gave up. Like I had like a depression for a while too. So it kind of get me too. Like I went through this depression because, like I said, like this was a lot of money for me, like a lot. And since I sold my business too at the time, instead of me investing in another business that I was gonna go to, now I lost half my net worth just trying to trade. So it was a big thing for me. And I went through this depression for a while too. But you know what? I decided not to give up, and I decided that I love it and I need to learn it. And I need to learn the right ways, not just, following the pumpers, jumping on the penny stocks, and just getting dumped every time I jump in. And yeah, it takes time, guys. It takes time. But yeah, don't give up. It's all about learning. That's how you get better. It's all about learning. For me, I see trading like any other job. You know, you want to be an engineer, you want to be computer science, you want to be whatever. You want to be a doctor. You can't just be a doctor when you have to study for 8 9 years just to start. So just you coming to trading, seeing some charts and support and resistance, and you think you're just gonna come and kill it in the market. Yeah, you might get lucky here and there, but overall, are you gonna be profitable like over the year? I don't think so, because you have to teach yourself a lot of things. Like I said, it's just learning the mentality of trading too. It's a big thing. It's not just the trading itself. There is the biggest thing about trading is actually, I think it's more of the mentality than anything else. Because if you don't have the mentality, that's what you actually lose at. Because you need the mentality itself. That's what helps you. If you don't have the mentality of when to stop, when to take your losses, not holding to your losses, which trade to take, all this takes a long time. Yeah, Picker. I've been like, if you think I didn't learn anything for the past, I still learn every single day. I learned stuff from RJ. I learned stuff from people saying like, you're never gonna get it. Like there is no limit to learning anything. And even like I said, even when you're an engineer, a doctor, it doesn't mean that you went out of college that you don't learn every day. You learn new things. There's always something new in medicine, something new in engineering, something you have to keep reading, and you have to get like getting yourself better because the markets change. You know, like market makers change, the algos have changed, everything have changed. The markets are not the same. Are the markets the same from 10 years ago? No, they're much harder now than they were 10 years ago. Even 10 years ago they were harder than, let's say, if you go back to like 2002 and like till 2009 or 2010. Now it's even harder. Like it went harder, and now it went, I think, after 2018 2019, it went even harder again now. And now I think it's even getting harder because of all the algorithms going on and everything. So it just keeps getting harder. So you have to keep teaching yourself what to do and what's new. I need to figure something out. If you need to adjust your trading plan or change what you like, I changed my trade plan a lot. Like the way I trade, not just my trade plan, but the way I trade. So let's say I was taking this kind of setups. Now I'm taking different kind of setup. I used to follow these indicators. Now I'm following something else because I'm just adjusting with the market. So the market's always changing, and you always have to adjust with the market. And that's one of the big things that you have to teach yourself. So it's always a process. It's a process. You need to learn more, get more info, know more about what you're doing, and learn from your mistakes. Always learn from your mistakes. You will never learn if you don't go back and say, you don't just take the loss. Before, I used to take the loss and say, it's okay, I took the loss, I'll make it back tomorrow. But the thing is that why did I take the loss? Like, what did I do wrong here? Like, was it my entry? Was it the markets? What is it? Like, you need to know what you did wrong. And that's the more you do this, the more you're going to get better at trading. So you're just going to have to keep pushing yourself. And it takes time. It takes time, guys. So don't give up. Don't ever give up. And just keep taking it one step at a time. It's a small process, One step, one step, one step before you start running. And it's gonna come by itself. Like one day you're gonna find yourself, okay, I'm very comfortable taking the trade. Like I don't feel any pressure. I don't know what I like. I'm not scared of taking this trade. I know exactly how this trade is gonna act or how this stock is gonna act. And even if it doesn't go, it's fine. I'll take the loss and just move on. It's okay. Like you see, guys, I show you every day now when we're trading together. I still take losses. It's okay. I don't freak out about it. It's okay. I went to the trade, didn't give my way. It's fine. I'm out. This Don't take it to the heart. That's the big thing. People get like I don't know. They get their like their emotions takes over them in trading. And that's the biggest thing. Once your emotions like take over your plan, like you're gonna destroy your day. And that's why it's one of the good things, guys. If you lose a lot in one day, just walk away. Like, don't try to overtrade. Don't try to revenge trade. Don't ever do that. So try to set yourself on a limit that if you lose that much that day, like let's say whatever that limit is, it can be $100, 1,000, 10,000, doesn't matter. Just put a limit and say that, you know what, if I lose today $1,000 or any day that I lose $1,000, I'm done for the day. I'm not gonna try trading. I'm not gonna try to make it back. I'm just gonna walk away, and tomorrow is a new day. That's it. Don't even open the laptop. Don't even think of opening. If somebody texts you and be like, hey man, there's a 400% run it, don't even bother looking at it, because you're not in the right set of mind to trade. And it's all about what you're thinking and your emotions in trading. So if you're not in the right set of mind, you're not going to trade right. You're going to be taking more risk, taking more aggressive trades that you're not supposed to take, and breaking every rule in your book. Like, that's the whole thing. One big thing that helped me before, guys, is that I printed some rules that I had to follow, and I had them in front of me on the table every single day when I'm trading. They're in front of me just to remind me, like, don't do this, don't do that, don't overtrade, don't do that, don't do that. And I just have, like, I picked up like that, like 20 of my biggest like failures basically, and I just put these in front of me on a table, printed in a piece of paper. I printed them and I put them right there in front of me so I can read them all day long, every day when I'm trading. So to push me not to do this. So that's something that also you can think of doing. So whatever you think you're doing wrong, just put it in front of you every day so you remind yourself not to do it. Okay, I'm not going to be averaging down anymore. I need to watch my position. I need to watch my risk. I need to do this. I need to do that. So you maybe that's something that can help you. So think of doing that when you're trading too. It's not a bad idea to do that when you're trading. So so that's one of the things that helped me for a while. I don't do it anymore, but I mean, in the beginning, it's a good push to have. But yeah, I hope that answered your question basically. So let's start. What do you guys have in mind? Let me have your questions. Let's go about any trades you guys did or something you want to see, or let me know. Or if you want to jump in and speak, you can do that too. You're welcome, anything. Well, that's good, Picker. I hope you're making money off of that. 3 years is good, man. That's a lot. That's a lot. I think the first year or two are the hardest years. After that, it just becomes a little bit smoother. You kind of find your groove, what you like to trade, how to go, all that stuff. So I think that's the biggest thing that takes at least the first year or two to get comfortable with trading and knowing exactly what you need to trade, what kind of setups you like, what kind of stocks you like. Yeah, the market is very big, like different stocks, different prices, different volatilities. It's like, yeah, you have to find your niche, like what works for you, because not everything I trade or RJ trades or this guy trades is gonna fit your style. So everybody has his own style, his own tolerance. So the biggest thing in that year or two is that you're trying to find what works for you, for your style. Not what makes you the most money, but what's the most consistent one, like that, that you feel like you're very profitable with it. So I was trying to fix that here to do something on demand, but it didn't work. So I'm probably just gonna go back to this one here, my old one. Okay, what else, guys? Come on, I'm here to answer all your questions. So let's see what you guys have for us. Or somebody can jump in and speak. That would be nice as a change. Ask. You're all quiet. Sure, no problem. All right, to go over your question, when did shorts pile in? They pile in right here. So as you see it, like from this right there. No, that wasn't one. It was here. This one. So that was the other day. But this day, I mean, I think I see like they started here, so they kind of tested the. As you see, they tested resistance. They broke the zones and everything. It was a good move. But over here, they started selling, and you have this wick with high volume here, and then it kind of like started dropping, and then you had this candle here. This is the one. This is the one I kind of seen on time and says it was just a lot of sell. Like it tried to go up, but then I seen it like a lot of sells, and the sells were like taking it down, kind of thing. It wasn't on big volume, which is also like not like, but it was an old red candle here. So if you notice, this was an old red candle like these, but it was a little bit bigger than this one. But I just seen it on the level two, on the time and sales. Time and sales, I seen a lot of sell orders here. And this one also was a big one too, because after he did this one, he did another one, and then he basically broke structure right there. He broke the structure, went through the zone, and this should have been your out. I mean, we should have been out here, but again, we can't tell the future, man, because you can have one like this, and it just because it was on this nice pattern all day. So that was a nice pullback, and then it went back up. So there was a potential that it would go. So we would never know. I wouldn't say like we did a mistake here. Like I said, like we had the target of $8, and we did hit it. Like we hit 805, so we hit our initial target. So you could have been out for nice profit here, a little bit, and continue the rest. And that's what I kind of did, but then I stayed more than I had to. Like I felt like over here when it came here that it's gonna bounce, like it's gonna do another pullback and go. But then 8:30 came, like you see, like it started already dumping like 10 minutes before 8:30, and then that's it. You broke all structures right here, and tested this with a big candle. Tried to break again, failed. Tried to break again, failed, and that was it. And over here too, that was the worst one right here, because here like this one, you broke the trend. Like you broke now all the trends. So you broke this trend that you've been holding from the day before. So you made this, came down to the trend here. You held the trend, went up again, and then you broke the trend here. That's why it was an aggressive dump here. So that was your biggest one here. The dump, that's the biggest dump here. And that's why this candle was like a big red candle here. But then it tried again, like it kind of built a trend all day here. It's still holding it, like it kind of holding the trend still. So it's still on the trend line. Kind of went under it a little bit and went back, and it's been playing with this trend all day here. Kind of touched it here, after hours again. Kind of closed on the trend. I wouldn't say like that's a break or not, but it kind of closed on the trend line, so it's not like anything. But this I would say this candle here. So basically, now that we know, so this was the initial shorting here and here. So this was the initial push down over here, and then they tried to keep holding it, but I kept seeing these wicks now to the upside, and this wick was like this one. I didn't like this one. It didn't have a wick under, and then like I said, the time and sales showed like some selling orders here, more than the ones before on the selling side. So that kind of like that got my attention here, and that's when I took the rest out here. Like I think I got out here, yeah, and the first dump, I took it out. I tried to trade $2 to $5 so I can stay with 2,000 shares. I mean, like I said, guys, in the end, it's money. It doesn't matter what you trade. So, I mean, if you have $1,000, you can still trade one stock for $1,000, or trade 10 stocks for $100. Doesn't matter, because that $100 stock moves in dollars, and the $2 stocks move in cents. So it's still the same. It's all about percentage. Really doesn't matter how many shares you hold. And that's the same idea like that we talk about with the penny stocks. You don't have to trade penny stocks, because you don't have to buy 10,000 shares. That's like not gonna make you any richer, because in the end you're following the stock. If the stock makes the 40-50%, it's gonna make it here or make it there. It doesn't matter. And this money. But you need volume. The biggest thing is volume. So yeah, you're taught on having margin to be able to do that. Well, we talked about margin before. The thing is with margin, like you need to be careful with margin. You can be like maxed out in your margin because like what if you take a loss? Like what if you take something like this here, like you're on margin and you're maxed out and you take a big loss. Yeah, if you have a 25, that's fine. Then don't like what like for you to trade day trade. You need margin. You can be the. I mean, you need margin to be above PDT if you're gonna day trade, or unless you want to do it cash account. But cash account will not give you all the benefits. So you can't short on a cash account, for example. It needs to be a margin account. So margin is good. It gives you a push, but you just need to be careful with your margin. Don't ever take all your margin. You know, like let's say I'm trading with like a $250,000 account. Okay, I never go like my biggest ever trade. Like I would go in 100K, 120K. Okay, I'm not even gonna max my own account. You know, so not even jump to like I can take it up to 1 million if I want to, but I would never like. Why would I even bother doing that? Because the risk it becomes too big. Like when you have $100,000 position or $200,000 position, just imagine like a 10 cents move. I mean 10% move or a 5% move. It's a big loss. So margin is good in its sense. Like if you want to trade every day and you want your money in and out quick, then yeah, get the margin just to be day trading every day, and you don't have to deal with the T+2 on the settlement and all that. Then get the margin. But if you're gonna get it just to trade with money you don't have, then no, don't get it because you're taking more risk and you're gonna get margin calls. So it's not gonna be a good thing. Makes sense now. Lost money, but learned from my mistake. Thank you. Got emotional and didn't see that big red volume on the red candle. Thanks. You're welcome, man. But again, emotions. Try, guys. Don't trade with emotions, like, because you need to concentrate. Like you're trying to read the markets minute by minute, or tick by tick. So you can't be emotional because like if you're emotional, you're not seeing these moves. What do you think about is money? You're just looking about. You know what? Something else I want to talk about. I never really mentioned it before, but if you guys trading and you're looking at your P&L while you're trading, don't ever do that. I used to do that before, and it's a bad thing. Don't be looking at your P&L, like, because you're supposed to know how much you're up or down based on your position. If you don't know what you're supposed to be in or out, like how much are you, like how much winning are you doing on that trade, or how much losses are you in right now, then you didn't pick the right position. Because if you pick the right position and you know your entry, you should know exactly how much you'll be losing if you got out here or you got out here. So you don't have to be looking at, because when you're looking at these numbers and they're going like, okay, now I'm up 500, I'm up 1,000, I'm up 3,000, I'm up 4,000. And then you start saying, oh no, I'm down 3,000. Now it went from 4 to 3. Okay, I'm going to wait because I went back the 4, and then it goes here. And then you're seeing the account now to almost 0. And now you're like 100 in red. Okay. So instead of you following it, or now you're 500 in red, let's call it, like you were up 4,000, now you're down 500. So instead of you taking it because you're following the plan and you know you're supposed to be out here, you're now thinking of the red in your account because you were green. And then you see this bump here, and then you're like, oh, okay, it's going to go. And instead of you going out because you only see some green, you don't get out at all. And now you take a massive red loss. So don't be looking at the P&L. You need to be looking at your candles, at your entries and exit, when you're supposed to enter, when you're supposed to exit. And that's all you follow. Don't follow the P&L. Because the P&L is going to play out. Like if you had the right trade, you shouldn't be checking the P&L. That's as simple as that, because the P&L is there anyway. But if like if I have 4,000 shares in here, like let's just make it an easy number. I got in at $6, okay, or let's say $7, okay, and I have 1,000 shares. If it goes to 8, I know I'm up $1,000, okay, and I know my stop loss should be here 680. So I know I'm only losing $200. I don't need to keep watching this whole roller coaster of emotions, of up and down, up and down, up and down, up and down, because then it's changing. The emotions are making you change your trade plan. And so instead of you going out, you actually thinking about the money you had and the money you lost, which you never had because you never closed. You have to think that, yeah, you were up here at $1,000, but you never had the $1,000. You never closed and took the profit in, so you never really had it. It was just a number. So you shouldn't be looking at the P&L when you're trading, guys. That's a big thing too that maybe it will help you out. But don't look at your P&L when you're trading. But also, I'm not saying not looking at P&L and you take a loss all the way down because you're not looking at it like, under your stop loss and get out when you're supposed to get out. That's it. On that on that MINM chart, can you show where the proper entry and exit point in one of the pullbacks? I either enter too early or too late. Well, you had this here was amazing. Like over here, I don't know if you can even trade pre-market, but if you were watching this here, that was the day before. Okay, so this was pre-market on Thursday. After hours on Thursday. Okay, and this was the morning. Like right here, it started. It kind of followed the trend, and we marked this zone the day before. You remember when we had the Q&A? We put that zone the day before, so we already knew there is a zone here. And if you see, it touched the zone, went down, touched the zone, went down, touched the zone. So your entry should have been here in the break of this zone right there. And if you didn't catch that one, you had the pullback, and the pullback set on the zone over here. Like this whole area was your perfect entry. You had multiple entries here. This whole thing was your entries. All these, whatever you entered here, 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 you entered either in the break of 7, because we had this line yesterday too. So it's either you entered in the break of 7, okay, or you waited for this little pullback, because maybe you never know. Maybe this would have went parabolic right here. So it's fine. You could have entered here, but here that you broke everything. So that's a BOS, break of structure right here, change of character, everything. You had everything in your side when you broke this one here, because this candle was big. So you could have entered here. Yeah, you could have got this one, but that's fine. Even if you got the wick here, it did the pullback. But the thing I would do if I'm here and I was gonna jump on here, I would never take my full position here. I will take it just in case it goes parabolic. I will take at least half my position right here. And if it goes parabolic, then that's it. I had at least some of my position here. But in case it does this and a pullback, then you buy the other half now more comfortably at the entry you were supposed to get, which was above the zone. So you could have entered some here, half here, 30%, whatever, 25%. Just take something here just in case it goes, so you're not emotional after that. And if it does the pullback, I will just add on the pullback, because now I'm comfortable adding on the pullback, or I even wait for this candle or this candle. I would add again here. If you even want, like, come from me, like you're still worried, even let's say you won't even get it on the pullback because you think maybe it's gonna drop down, I would wait for this candle and just take it even on a higher price. But now I'll take my full position, because now I know it did this, it did a pullback, and now it's pushing higher. So now I would jump here on this one. That's fine too. But then again, you had all these pullbacks. Like you had the pullback here on support right there. So your resistance became support, and you could have just simply entered here also, this candle here. So you had this option to also enter. So even if you missed all this thing here, you had another pullback here. And then that's it. You would play it here. But this is the thing, like over here, is that's the price we were looking for. So you should have at least sold some here. 20%, 30%, 40%. That's it. And your break of structure was this one. So you shouldn't have waited even for this candle. So once this broke right here, you should have been out. I didn't even follow my own plan here, but that's fine. But I'm saying now in hindsight that we see it, that's how it should have been played. But I mean, you can't play everything perfectly, but at least the entry, for me, the entry is always easier than the exit, because the exit sometimes you change something or you see something, the stock flips or level 2 changes. So I might adjust this based on that. But the entry will always be the entry. I'm looking for this. I'm looking for the move. I'm looking for the volume, and that's it. That was the perfect entry right here, right here. All this was your entry right here. All this zone was your entry. You could have entered anywhere here. Not even a specific candle. You had multiple candles, almost like what? That's 10 minutes of trading that you could have entered. Oh, yeah, 15, 20 minutes. You could have taken a decision here at any moment. Easy, simply not rushing. You took your time to enter. You kind of did some quick analysis on support and resistance, and you know where exactly to enter. Because even without the zone, I mean, if you put a line here, if you see this a line right there, without even knowing anything, without even the zone or anything, you had a line here. So you broke your resistance right there. When you're trading the pullback, I don't really like. I don't care. Like I'm not the pullback guys. I trade when I see the chart. the candles. So if I don't even see a pullback like this, I would have entered like in the long run. I don't even like pullback is not my main thing. I don't have to wait for a pullback to enter a trade. I could have entered here. Like here, I seen the level 2 going over here. I would have entered here just based on seeing these candles like push, 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 and then I'm seeing the volume going up. So I could have simply entered here. So pullback, yeah, you can enter if you're more comfortable entering a pullback than play the pullbacks. Like RJ loves the pullback. I think pullbacks are safer, okay. But in my case, I don't. Sometimes I don't wait for the pullback. I will just go for it. But you know, I've been trading for way longer than you guys, so I take risks, a little bit more risks that you shouldn't take. But if you're playing it right, I would have waited for the pullback. Of course, I would have entered on the pull. But it doesn't have to be red or green, man. That's the thing. Like you have to think like it doesn't matter. Like 710 from 680 or 690 or all this in the end, you're looking at 750 or $8. So the 10 cents, it's not gonna make any difference. Okay. You got like over here, it doesn't matter if you got on the red, the green, and then the difference between these is like 15 cents. 15 cents on a dollar move that you're looking for, it's nothing. So you're gonna make 90 cents instead of making a dollar, or you're gonna make 80 cents instead of making a dollar. In the end, it's still profit. On 1,000 shares, you made 800 or you made 900. Doesn't it's not the biggest thing. The biggest thing is actually making the decision to get in and knowing when to get out. But the 10 cents in here, if it's the red candle or a green candle, it doesn't make any difference. In the end, it's a trade. So don't put too much emphasis on what candle exactly should you enter. And you're looking at the whole picture, not just one candle. So it doesn't. I even said if you want to enter here. So even on the higher one, just to be more comfortable. Because then even if you took it at 720, 730, you're still making 70 cents. So don't be like emphasizing on what color the candle, what does it look like, or all that. What you're looking for is the movement. Is it holding? Is it gonna dump, or is it holding? Like, did it do this and did a pullback? It hold the 13 here. Yeah, it touched the zone exactly. And you know what? I see this candle. I see this wick. It means that the buyers just showed up again, did that green, basically to push this, and here we go. We're going. Also, there's people that use something called the 3 candle nights, okay, which basically means that when you have 3 candles like these, you normally get a pullback or you get a reversal. So that's something you can also watch. I don't really watch them that much, the 3 nights, but if you want, there's some people that watch these. There's the 3 candles, 5 candles, and I think it's 3, 5, and there's another theory of 8. So there is 3 candles, 5 candles, and 8 candles. So if you see 8 candles in green, like there is a big reversal coming. And same thing, if you see 8 in red, there is normally a huge, but I think they come in 3, 5, and 8, if I'm not mistaken. But I think that's, I don't use that terminology. I don't trade with it, but I think there is emphasis on this. Like it's, I know the 3 nights, but I think there is also 3, there is 5, and there is 8. So if you have 8 green candles that are breaking structure back to back, then probably you're gonna have a big reversal. So is it good to trade? Idea trade both longer. So it's good to trade long and short. Well, first of all, I'm not sure if you heard what I said, but you can't do short if you don't have a margin account. So if you have a cash account, you can't even short. Like shorting has to be on margin account only. It can never be done on a cash account. You can do it on a cash account. You can do it on an IRA. You can do it on a Roth account. It has to be a margin account. I got in the large green candle. These are good. So you went here and then you went down here. But why would you do that? The question is why? Why would you do it? Like when you entered here, didn't you have a stop loss? Like what was your stop loss? Because for you to enter here, what's your stop loss? Let's say you even enter on the high side, like on the $7. What's your stop loss? 680, 675. Because your stop loss should at least be the closing of this candle. So even if we're just looking here, so your stop loss should be only like at least to here, like just to even break of structure like here. So even if you entered here, that's your stop loss 680. This one was 690. Why would you even bother coming up? Like There was no reason for you to get out. Like, so if you're talking about this one that you entered here and went out here, why would you even get out here? You didn't even break structure. You didn't do nothing. You didn't even touch. You didn't even touch the zone. So why would you even bother coming out? Because stocks have to move, man. They have to do consolidation. They have to do pullback. So it's okay as long as the stock is not doing a crazy move. Why would you bother going out? Like, yeah, this one is scary. But even over here, if you notice, you should, like, over here you're watching the trend. So if any of these stocks here, see that it went all the way to here and it never broke through, would you have went out? No. Why? Because it's still following the trend. Same thing today. I held this over here. Look at how many times, like, if you're freaking out, you would have went out. But did it really break the trend? No. Not even a single time. Even the zero ones that went under it, it didn't really break the trend. This is here a break of trend. Okay. This is a break of trend. You see how the trend broke? This is a break of trend. This here is a break of trend. Look how it is. But the rest here, look at that. Even here, like, we could have got a bounce here. We didn't have the buyers that day. It was Friday, I guess. But this stock kind of held pretty well. Even in here, on this trend, if you put a trend line here. So yeah, I'm just going to make this a little bit shorter because it's doesn't need to be done. So this one here, you never even, like, this one continued. So even if you entered here again for another bounce, you still hold the trend. It's when the trend broke is when you had the issues. So don't freak out just seeing a red candle. You need to know what's the red candle and what happened to the next red candle. Because if you waited even for a confirmation, you know we never get out on one candle anyway. Your second candle confirmation was this one. That's a reversal one. You're basically reversing. You did the reversal right there. Look at this wick, and it's telling you, okay, you know what? I have buyers here reversing. I have buyers here. Then it's telling you, okay, there is more sellers, but still, you never even broke the structure. They all held, all of them. So before you make a decision, try to get a confirmation. Before you jump in or out, just always have a confirmation. Like, you're looking for the candles for confirmation, for volume, for everything else. So I hope that helps. Believers, I'm kind of late to the Q&A, so I'm sorry for that. Basically what I just said, Bullover Bears. Confirmation is always volume, level 2, and trend, and candles. You can't get anything more than that. If you want to add some, like, indicators on top of it, go ahead. But I never just take the indicators as my main thing. Like I said before, like, this is my thing. I look at candles, I look at volume, I look at my level 2s, and that's it. That's my confirmations. And my candles are the best confirmation you can have, because every candle is telling you a story. It's telling you, okay, you know what, there is buyers here, no, there's sellers here, and no, there is more buyers. Buyers have stopped it. Buyers have stopped it. Buyers have stopped it. But then when you get to here, okay, now we have sellers. So you could have easily said, oh, okay, now we have sellers. They pushed it all the way down. Now over here, okay, the buyers came in, but we had sellers again, so they pushed it down. And then you had this one, which is a reversal. We should have, like, kind of seen all that. But the trend was up a lot, so it's okay to have a pullback. But we had a big pullback. Like, I wish this didn't happen at 8:30. I was hoping that it's gonna reverse or at least hold the trend here till 8:30 and we go up. But what happened is that I went down. It's okay. It's okay. But all this here was telling you, okay, we have sellers, massive selling. It was just massive selling going on. So your candles are just telling you all the story. You don't even have to look at anything else. So just watch the candles, and every candle confirms something else. Basically, they give you a whole story. Like over here, there was a whole story right there. You went up, went down, sellers pushing it, okay, pulling out of the zone right there, trying to pull liquidity, and then they pulled the liquidity. Buyers came in, buyers stepped in big time, big volume, okay, and buyers just pushed it for another short squeeze. So your candles here were telling you the story, okay? There's a fight now between the buys and the sells, between the buyers and the sellers, okay? Waiting for the auction to close. What is it going to close at? Okay, never touch the zone. So now I know I'm between the zone, I'm between the resistance right here. And this is kind of a fight that's going to keep going. And I'm seeing the fight going on. Sellers, buyers, sellers, sellers, buyers, sellers. Then buyer. Big buyers too. So this was on very low volume. And then you get this wick here. These are the ones that I always talk about, guys. Like when you have this big volume and then suddenly it's a change of color. And then a small wick like that, and then you get a massive move next to it. That's the move next to it. So try to learn your candles. Candles teach you a lot. Hi Hennessy, how do you set liquidity zones, and does it matter which time frame you're on? Time frames don't matter, man. Time frames work on everything. So support and resistance, liquidity zones, they all work on the same time frames. Liquidity zones, these I do like small liquidity zones, man. These are nothing big. The liquidity zones are easy, man. You're waiting for these big candles moves with breakup structures, and they are normally between support and resistance. You don't have to be perfect, man. I mean, I used to do them perfect and look for every candle. I'm looking for this big candle here that indicates the liquidity zone and breakup structure and all that. I just do it now with my head. Yeah, it's not. I would say it's not 100%, but it's 90%. But it's easy catch, man. You see these movements here, and that indicates you have liquidity here because you try to break out of support and you fail that resistance. So this means you have liquidity here, the same thing as here, and then you had it here. So it's okay. And if you even notice, you had all this fight here. They're trying to break out liquidity, in liquidity, touching liquidity, all this. So you see it from the candles too. So I do it based on candles, and I do it based because I see it with my head, like what's going on, and I see the volume happening on level 2 too. So I see the fight happening on level 2. Like I think we had that same problem. What's that? Yeah, IMBS, we had that fight at what, 5, was it 610? When it hit the 610, I think. Yeah. So you know that there was a zone here. Just looking at level 2, you already know that there's a liquidity zone here. Because the way they kept fighting that area, you know that that's a liquidity zone. So it's easy to do it. But there is a science. Like if you want to do it right, there's a lot of science around it, man. Like you have to watch for specific candles. And these candles basically, tell you like these candles are what takes you in for the liquidity, and then you have this one which is a break of liquidity, so you know the liquidity zone is here based on these two candles. So there is a lot of science around it. I don't really get into it because I think liquidity zones weren't made for stocks, they were more made for forex. So I just add them on stocks because they make sense in stocks, but I don't think they have so much emphasis in stocks like they do on forex. I think forex like honors these zones more than stocks. I lately started doing them on stocks, but before I was just doing support and resistance. So don't bother too much if you're not into forex and all that. Like this is really an extra layer that I'm just doing, but I honestly think stocks follow more support and resistance and trends more than supply zones. Because like I said, supply zones were initially made for forex, they were never made for stocks. But it's okay to add them on stocks. They kind of help. Nothing bad about it. But I think support and resistance and trends are stronger on stocks than liquidity zones. Yeah, don't be too stingy with your stop loss. Because you're trying to make money, okay? So you have to look at it, okay? Like if this is your entry, okay, in here, okay, you look at a stock that's trading at $7, okay, so $7, and you're risking, how much you gonna risk? You're trying to make $1 out of it, okay? So if you do a 50 cent, okay, that's a 1-to-1, okay? So what are we trying to do? We're trying to do a 3-to-1. So 3-to-1, which means what, like 30 cents. So if you were in at 7, your sub should be 670 because you're risking 3-to-1. Okay, even let's put it the worst case, 2-to-1. 2-to-1, which means that if you enter at 7, your stop would be 650 and you're risking it to 7. I would never play 2-to-1. But let's say even you're playing the worst risk possible, your entry should have been 7, whatever, 705, it doesn't matter, 680, 690, and take a 50 cent to $1. I wouldn't recommend that. At least make it 40 cents to $1. And like at least like just break the 2-to-1. Don't be 2-to-1 as much as you can. Like try 3-to-1. Or more. Appears you have 4 or 5 trend lines. Can you explain this? Yeah, because the trends are changing. These are micro trends. Like this is a big trend. So the big trend was here. So this was multiple days trend. This is a big trend right here. Okay. This I could remove, but I don't like to remove these because I think, just based on my experience in a long time, these trends kind of play out after a while. So after a while, it's probably going to play here. So that's why I left it. I could have taken this off. And this one, yes, I could take this one. I can definitely take off, but because you're following the stock, like the stock that day did that on that day. That's your trend for the day, right here. And then this is the trend for like 20 minutes or 30 minutes. Because don't forget, the stocks are always making trends. So you're trying to catch what the trend is doing. So you're trying to build like a base what the trend is doing, you know. And every day it's a different trend. So if anything right now, I'll remove all of them and just keep this one. Keep these two basically. Keep the last two that I have. So I have to keep this one because that's where the trend is closing right now. And then I would keep this one. But the other two I can just simply remove. So don't just keep them. So you're just doing the trends because the stock is doing the trend. You have to keep doing the trend. I think if you go on Mara, like, I think if I even go like 15 minutes. Look, man, I have all these trends here. It doesn't mean anything. It's just that day that I was playing it. It was on the downside, downside, downside. I was shorting, 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 shorting. You know, so that's the trend for that day. Every day. You won't even see like on the 15 minutes. Yeah, it might look here. Look at that. On the 15 minutes, it shows up. But these are done. I could just delete them. I'm just too lazy. I don't just go back and like when I play it again, I normally would go back and delete them. But since I haven't played more in all week, I haven't really touched it, so I didn't remove them. But yeah, these are the mini trends, and you just remove them when you're done. How do you use your different lines? Like, yeah, I love my moving averages, man. I have all of them, and I have the 50, 100, 13, and the 200. Okay, my main ones are always the 50 and the 13. The 200 comes in play here and there, but my main one is always the 13 because it's like the closest one, because it's like a faster moving average. So the 13 is always big to me. So I always use the 13 and 50. And for me, when the 13 and 50 kind of cross over, it's always a bad thing. Like this crossover, I know this I should have been out here. So even the candle I told you about, guys, it's where my crossover, like this was my indication to get out. My 13 crossed my 50. That's it. We're dumping. We're going down. That's it. So that's how I use them. But the 200 is good, but I think the 200 works better on bigger like time frames, like on the daily or something. Like so, if it's like let's say on the daily, it's gonna break the 200 or something like that. That's a big move. So if it's holding the 200, it's a good thing. But on the 1 minute, I think the 50 and 13 for me are my best choice. I always like the 50 and 13, and based on the candle I see, I make a decision here. But like you see here, this was a crossover here, and even the candle I told you I seen the shorts, the crossover is right there, and basically that was my exit. I should have just exited here, but level 2 kind of got me on this one, so it is what it is. So you can't really win them all, but that's how I use them. So I don't put too much emphasis on the 200. Like I said, the 200 I think it's better on like it works sometimes. It's not my biggest thing, but I think the 200 works better on longer time frames, like 30 minutes to 4 hours to a daily. The daily is super strong. If you have the 200 on the daily, like let's say you have a stock that's either touching the 200, that's a very strong resistance that you have to watch out. Or if it's touching the 200 and going up, it's a very strong support. So keep that in mind. So these are liquid. It's not a big move with candles, man. It's like I said, like I see the stuff happening on level 2 mostly. So that's why you won't see them on all my charts. It's the ones I've been trading and I've been watching. So I'm going based on level 2 data that I'm seeing. I can tell that there is a liquidity zone. Some people call it an iceberg because you can call this an iceberg. Like there is a seller here or there is an iceberg order over here. So it's not just liquidity zone. It can be many things. But I know there is an issue here. So for if you want to make it easier, call this an issue. So you can call it liquidity zone, you can call it an issue, you can call it a lot of things. But yeah, liquidity zones is normally where you're gonna have these movements too. So yeah, if you see here, like we had this liquidity zone, and they always come back. Like if you're playing the mini trend, they will always come back and test. So even this liquidity zone we had it the day before, and if we just extend it, look how far it went. Like on this was the day before. We had it here, and this one we had here. And if you're just gonna extend this one, it's gonna even go all the way. Because here you go. And if you're gonna see here, okay, thank you. So even if you go here, we still tested here. Look at that. So this is mostly from level 2. I see that stuff happening on level 2. But it's also the candles. You can tell from the candles, so it's easier to catch even with the candles. So, but normally, like, it's easier on stocks to see, like, between, like, if you're here and it goes clean like that, you would see that it will come back and touch this area here too. So over here, like, you see it touch, it went inside of it, touched it here, inside of it, touched it, and then it broke through it right there. So it's easy to catch, it's easy to make, it's not that hard. But again, like, don't put too much emphasis on this stuff, guys. This is like stuff that are extra to do. So keep it simple, guys. Like you see most of my charts, I never have this stuff. I just have it for these talks because I was just teaching you some stuff. But normally I wouldn't even have it. It's normally on my mind. I see this stuff in my head. I don't even need to put it. I go just base with lines and that's it. Lines, trends, and moving averages. That's it for me. I keep it very simple to have a clear decision, because then if you have this here, the problem is that if I teach you this or I tell you, okay, how to build it, then you're gonna start making decisions based on these zones, and you really shouldn't be making decisions. Like I said, this is just an extra layer to confirm. Like over here, even if I didn't have that, I could have just simply put a line right here, okay, and said this is my support right there. And if you see, that's a strong support. Like if we take this and put a line, you're gonna see that the line is touching all these. And at least now you know a better thing. But let's say you had this zone and then it broke. You had the zone up a little bit and down. Oh my God, like it's touching the bottom of the zone. Okay, I need to get out. Because that's going to ruin your trade. Just because you're looking at more than you need to. You're trying to make it as clear as possible in the trade, guys. You're not trying to make it complicated like rocket science, you know. I used to see people that have their charts. Oh my God, I don't even know how they read candles. It's 30 different indicators, colors, balls, book map, all kinds of. I'm like, how the hell would you even know? Like, what do you think? Like, which indicator are you gonna follow? Like, if you have 30, 40 indicator, like, which one are you gonna follow? Because you have to think that everyone is giving you a different set of data, and if you have 30 different sets of data and each one is giving you a different call, which one are you gonna follow? And you're trying to make this in real time decision, so it gets very complicated. So keep it simple. The simpler it is, the easier it is. You're gonna find that the pros don't trade with a lot of stuff. They have it very simple, either VWAP or a couple of moving averages, maybe a MACD, RSI, or a couple of indicators that they have down here, and that's it. They don't go crazy. The people that you go see have these fancy charts with all these kinds of things. I promise you, man, like they're not making life. They either paper trading or they're just pumpers and they don't care because they know the stock is gonna move up. But if you want to trade this on your own and you don't know, you're trying to make it as simple as possible. The candles tell you everything. You don't need anything else. A simple trend line, a simple support and resistance is all you need. When you get to a more higher level, you can start adding more stuff and experimenting with it. But when you're beginning, you're trying to make it as easy as possible, not as complicated as possible. That's the whole thing. So you guys don't need to learn about level 2. You don't need to learn about this stuff. You don't need to learn about the basic stuff. The basic stuff is what's going to make you the money. This is not going to make you the money. Because if you think this is your edge, that if you learn this, you're going to make money here, no, you're not. This is just an extra layer on top of everything you know. But if you don't know the basics, you don't know the foundation, this is useless. This is going to give you false entries and exits, and it's just going to ruin your trade. So just think of the simple stuff, guys. The biggest thing, again, support and resistance. Learn your support and resistance, understand your candles, understand the patterns of the candles. It's not just looking at the candles. You're trying to look at the candles and know the pattern. Like, what is the pattern of this candle? Why is it going to move to the upside? Is this movement continuing here to, it's going to go upside or downside? I mean, it's simple. If you look here, look at that. We had these choppy ones, no volume because it's 3 in the morning. But then over here, you start getting this volume. So even if I didn't have any of this here, okay, let's say we don't have any of that. Okay, none, 0. And I only have this here. And I'm looking now. Look at that. We had at 6 a.m. We had this movement. It was mostly all red. Compare this, all red, red, red. But then he had this movement. It's okay. It's a good movement. He had a strong pullback. He touched the trend. So now you know, okay, the trend is strong. And I don't need to watch anything else. I'm watching. I don't see any green. But then suddenly here, okay, compared to this, you had here 1, 2, 1, 2. 1, 2, 3, 1, 2. But over here you had 1, 2, 3, 4, 5, 6, 7, 8 green candles almost in a row. Like you had the reversal here, This not, and let's not even count that. Let's even not count these two. But even if you count here, you had 1, 2, 3, 4, 5, 6. With continuation, volume going up. Okay, that indicates, okay, there is a movement here. The buyers now are coming back, and I didn't have to look at anything. Like if I didn't have nothing on my chart, like I didn't have any support, any resistance, all I had was a simple trend line and just the volume, just the candles. That's all I need. That's all I need. I don't need anything else. And guess what? We do this one next. Look at that. More volume, more volume, more volume, crazy volume. So you could have entered just for a scallop even. That's a 50-cent move right there. Could have just entered here. 660. You waited for 1, 2, 3. Even on the fourth confirmation, you're in and you're out. You could do a scallop right there. Just there. Without looking at anything. No zones, nothing. Not even looking, no level 2 even. I can just trade just looking at the chart. Like the way I have it right now. I didn't need an indicator for it. You don't need anything. So don't make it complicated. This is your main thing. Learn your candles. You don't trade candles. You trade Ichiki, whatever you like. But just learn this, and that's gonna make you all the money. You don't need anything else. And then after that, you start adding. Start adding one thing. You want to add one indicator, two indicators. Take something from RJ, add one more or two more. That's fine. But don't just try to put everything together at the same time thinking it's going to give you the edge. It's not. The edge is all in learning the basics. It's not learning the hard stuff. The basics is what's going to make you the money. Well, I'm trying. I speak about the level 2 a lot, man. But the thing is that, again, like, you guys are putting too much emphasis on it, and it is not as easy as me telling you how to do it. It's gonna take you forever to understand it. It's not something I can teach you because nobody teach me that. Okay, you have to understand. I teach that to myself. So for me to try to teach you what I see with in split seconds, it's very, very hard. And again, it's gonna make you take wrong decisions that you don't need to take. So yes, this helps me, but it helps me after watching it for years. Years. I can sit here and talk about it every session with you, and it doesn't matter how many times I talk about it. You will never get it 100% because it is very, very hard. It takes split seconds to see it, and you have to be actually good at everything else. Because think, if I tell you how to do it, all you're gonna do is just keep staring at it, okay? And you're not gonna be looking at the chart or the candles or everything else, because you're trying to catch what I told you, that sometimes it happens, sometimes it doesn't, and you need to know when it happens and when it doesn't happen. And for you to try to even learn it that easy, or you think it's that easy, it's not. It's actually gonna ruin your trade because it is very hard. It takes time. It takes time to learn that stuff. Like, I catch that stuff with my eyes real quick, but I'm concentrating. My main concentration is here. I'm looking at this with my eye, just catching the stuff with the numbers, but I'm not staring at it the whole time. But it's gonna take you a lot of staring here and learning. Like, you're gonna have to sit for days and weeks and months just trying to learn this, watching in different stocks. Because like I said, every market maker is different, everyone is different, and you have to start seeing how every market maker does it, and when they make it, what stocks are they working on, and every stock is different, the numbers are different, the time and sales are different. So it takes a lot. So it's not easy for me to teach you. So I can keep telling you how to see it, but in the end, you're gonna have to put the hours in to see it, like a lot of hours to see it, because that's the whole problem. So it's not that easy for me to teach or make a class about it. Like, I was gonna do one today about it, like just to talk about it, but honestly, on demand is not working. But I was trying to do CRBP or save to show you guys how CRBP was moving, or save. But we had it here too. We had it here. We had it here in this one. So if on demand works, go back. But like I said, like, the biggest example, I think the slowest one you can watch is the EYPT stock, because I think this was a great one to watch because it was moving a little bit slower than these. But the only way you're gonna learn this, man, is that you take everything I told you guys and you try to see it for yourself. It is very hard to explain, especially when level 2 is not working. It's very hard. Like, that's why I did the live classes with you guys, because I wanted to show you when it's going live. But without going live, it's very hard for me even to show you. It takes time to learn that stuff. You're welcome, Jam. Hennessy, I have to go. You're welcome. You're welcome. Edward, I don't use VWAP, man. But VWAP is the same thing. I mean, some people like I used to use VWAP, but I mean, it's okay. I don't like the VWAP in here. I think the VWAP on what is it? The shoot Trading View. On Trading View, I think the VWAP is nicer than the one in here. But VWAP is the same thing, man. It's a moving average, and I don't. If I ever use the VWAP, I don't use it with the upper bands, man. I just use the VWAP itself. So so if I'm gonna do it, I'm gonna do this here and remove this, remove this. But that's how I normally do it, like without the upper band, just a simple line. Makes it easier to track. That's for me. So when I used to use it, that's how I used to have it, like that, without the upper bands or the lower bands, just the view up itself. So that's something that if you want to do it with the upper bands or lower bands, it's up to you. And then this here, the deviations you can change based on what you like. So, but that's how I used to have it. But I don't know. I just don't like. I know people I know people that only trade with VWAP, which is fine. I'm not gonna say anything. I can't say one thing is bad or one thing is good. I didn't feel it's working for me. So, but it's a great indicator. But again, for me, my style, I just felt like my stuff worked better for me. Doesn't mean VWAP is good or bad, but if I when I used to use VWAP, that's how I used to have it, without the upper bands or the lower bands, just that, just the deviation. That's it. I got rid of the VWAP because yeah, it's easier. You can just take the bands off like I showed you. That's it. Just take these two out. That's it. Take them out from here and here. So yeah, TOS has a lot of stuff, guys. If you dig into it, like TOS is like, it's too heavy because it has way more stuff than any other platform. But you're gonna have to dig and find what you're looking for. But yeah. Okay. Did you see how I take it off? It's simple. Just go here, go on your settings. You can either double click here or just go on this, and just go on your upper band, take it off, take these three off, and take these three off. That's it. And you don't have the bands anymore. And to answer your question, why not? Because I think if you have the bands, man, it gets so complicated. Like I feel like honestly, I feel like when I'm using the upper bands and lower bands on VWAP, it's like I'm using Bollinger Bands. I just prefer then to use Bollinger Bands because look at this, it becomes literally like Bollinger Bands for me, and you can tell what is going on, what is the story, and it's like way too extended. But the VWAP, like the actual VWAP itself, is this. That's what you're looking for. It's just the deviation line between the moving averages. That's your biggest thing. So that's why I don't like the bands, because if I put the Bollinger Bands, look, almost looks like I have Bollinger Bands. A Bollinger Band, I think Bollinger Band. If I'm gonna use the VWAP with these, I prefer to use the Bollinger Bands easier than using VWAP with the up and the down. I think it's more accurate when you use it like this. It's more clear, and you can have more stuff with it. That's why I used to have it like that. I don't remember what I used to have it with, but I used to have some moving averages with it that I used to use at the time. I haven't used it in a long time, man. But I used to have like a couple of moving averages with my VWAP, and that's why I didn't have the upper band or the lower band, because I used to have like added stuff to it. So that's why I used to have it this, so it gives me a clear idea what the diversion is, and that's it. I hope that answers your question, Edward. I just got here. Okay, Martina. I will try that. Thank you. You're welcome. Okay, Rock V, in regards to stops, it depends, man. Some stops I do it manually. Some I put an actual stop. But my stop is always stop market. I don't do stop order. I don't do. I don't do stop limit. I either have a stop order or an OCO. That's how I do it. So either I have an OCO to like sell here or whatever comes first, So either get me out or sell me at a target. So let's say if it was here or here, I'll put an OCO for my stop loss here, and I put like sell at 8. So whatever comes first, it will kick me out. Both at market. So I put OCO both at market, and that's it. Brackets, I don't use brackets, man. I don't think brackets are for this stuff. Brackets is for more stable stock. Like you have conditions. You want to put a condition, specific condition. And I think if you're using brackets, it needs to be used on large caps or investments or stuff like that. I don't think the stocks we trade here need brackets. They move too volatile, too quick to even have a bracket. Because what if you have a bracket and you weren't sitting? Okay, you have to think out of it this way. What if you had the bracket and you weren't sitting watching the stock and you got executed and you didn't notice that you got executed and the stock got dumped? That's the problem with having brackets too. But when you're investing, you know, you want to get in this stock and it's a long term and that's your entry. It doesn't matter if it goes down or goes up. Then that's why bracket is important. But I wouldn't use brackets on these, if that answers your question. But I would use OCO or stop. But definitely do stops, man. I don't do stops sometimes, but I would do stops for sure. Always use stops. Especially if you're new, always use stops, man, because I kind of honor my stops, even if I go lower a little bit or stuff, just based on a little things. But I always still honor my stops. I would say 85% of the time. Yeah, 15% of the time I don't honor them, and I wish I like had them solid. But if you don't, like, you have to put them, so you don't think about it. So when the stock goes, you're out. You don't think about it. So if you get emotional or you keep moving your stop loss, then definitely put your stop loss. That will help you a lot, because then you're gonna make the decision when you have clear mind and you get stopped out right away. You don't have to think about it. You don't have to redo your plan. You don't have to do anything. So I would recommend doing your stop losses always. Always. When you come to my position, you can maybe not do it, but you know, at the beginning, definitely yes, you have to do it. Okay, what next, guys? Anybody wants to jump in, ask questions? You know, you guys can still speak. If you want, just raise your hand, I guess, in the Discord and let me know, and I can add you there. Questions, questions. So I guess we heard somebody send me Mr. Schmucky's YouTube. So I guess CTG was another Jason Capital, huh? So it was another basically Chinese pump and dump, huh? So that's what happened here. That's what happened. So this is what it was like, the ZV whatever Y, what was it, ZG YL. Yep. So this is something like this dumpster here. So that's what happened now, basically. So another Chinese pump and dump. So yeah, CCTG is done. But that's why I don't like he said something that's true. Like, I remember one time, I don't remember what stock was it, but it's a long time ago. I got halted in a big halt, and it took 9 months. I was stuck in the stock for 9 months. 9 months, guys. Imagine that. You got one of these, and they just put it on a halt. It was halted for 9 months. So you imagine you were in a margin call or something or whatever, and your money was frozen for 9 months. You couldn't get in, you couldn't get out, and guess what? When the stock opened, it was down 90% in the first candle, like just like that. So be careful with trading this stuff, guys. So that's why I didn't even bother looking at this one. I wouldn't even trade it, because, you know, most of them are scams and they can be halted for good. So just be careful with that, because it happened to me. It happened to a lot of people I know. So just be careful with it. So, but yeah, now we know what happened, why the dump. So that makes sense, because I was like, well, I looked out for the halts and I couldn't find anything, and I was like, what is going on? Why I can't find news about a stock dumping that hard? And I couldn't find anything, but somebody sent me that video and I kind of watched it. But yeah, Because God forbid if you get in a T12 halt, oh my God, you gotta regret that day because they can take months. Like I'm talking like I seen stocks for a year on T12 halts because they are scams. So they just halt them until they figure out what's going on. So imagine you have your money here, you can't trade anymore. If you have a small position, it's a different story. If you have a big position, then you kind of ruin. If you're short, yeah, now you're on a margin call basically because, yeah, like, let's say you took that trade on a margin, now you owe that margin. Doesn't matter if you're up or down. If you're losing, you owe that margin now. So you're gonna have to pay that. Yeah, man, they should have that, but I mean, that's your that's you, man. You need to do the research, not them. So if you jump in a stock and you don't know what is it or what does it say, that's kind of your fault. You can't blame them for it. So why would it take so long? Because they put on their T12 halt, and T12 halt basically they are requesting more information from the company. So something is wrong. So they see something is fishy, and basically they halt it to get more information from the company. It's called a T12 halt. It happens a lot. Happens a lot of stocks actually. You'll find stocks sitting in T12 halts all the time because they are like they just need the information. There's something wrong. Like Nasdaq sees something wrong or whatever, it's on there. They see something wrong or something fishy or they see like there is a scam or something going on, so they halt it. They halt it until the company gives them more information. That's what they do. So that halt can take days, can take weeks, can take months. There is no nothing to it. I'm trying to see if we have anything here. Okay, so I'll just show you something cute right there. Here you go. YNDX. So based on what I'm seeing here, YNDX has been halted since 02/28/2022. So Racy also. Okay, Racy's been halted for a year, I think. I don't know if it's halted for something. Maybe they are closed. I'm trying to see if there is any stock. Nothing. I don't see now. We don't have anything really useful that's halted right now. TIO. Let's see TIO. Okay. Oh, TIO is halted still. Tingo. Look at that. TIO has been halted since October of 23 to now. So yeah, TIO has been halted for a while. Yeah, from 11/13. They've been halted since 11/13/20. So it's already been 2 months that they're halted. So is this what? Is this T12 halt mean it just came out? What do you mean it just came out? I'm kind of not sure what the question is. T12 halt is like any halt, man, but the stock is gonna say like it's under a halt. So it's gonna say it's a T12 halt. That's what it's gonna say. So once the stock goes under T12 halt, it means that the SEC, I mean Nasdaq, is requesting more information, and the company has to give information to them. So once they give them the information, they will reopen the stock. And what information they're asking, that's I can't tell you what is it exactly, but it's whatever information they're asking for. So they're gonna tell them like, we need this information, we need this financial information, we need this or we need that, and whatever they ask for, you're gonna have to give it to them. So the halts we see is the regular halts. Like you have the T2, like the T2 is the news halt. T1 and T2 I think are the news halts. These are the ones that we normally see, like when you have like earnings coming or something. These are normal stuff. But then T12 is the worst. Once you see a T12, you're done. So this is the one, like, be careful if you ever see. But it's normally like these Chinese stocks are garbage. So just always be careful if you're trading these ones. No, T12 is not a new stock, man. T12 is actually like, if you see, the stock has been trading for a long time. So something happened here. Look at that. So we're already on the January 12th. It says here, Tingo Group gets non-compliance notice from the Nasdaq. So they had issues. I guess I don't know. I'm not watching the stock. I don't know anything about the stock, but look at that. It says here, Tingo Group received Nasdaq requests for information following expiry of Security Exchange Commission temporary suspension of trading. So they did something. Oh, that's the thing. Oh, shoot. Oh, I think that's the African company. That's the billion-dollar company that was a scam. That's the Tingo Group. Oh, I now remember what is that. Oh, that was a phone company scam. It's a guy that didn't have any business and he's been pushing it everywhere, and they kind of said that he owns billions, that he has companies that are worth billions, and they discovered he doesn't even have a business in the first place. I don't know how he scammed all these investors and got on the stock exchange in the United States, and he doesn't have a single store. That's like, it was a huge scam. We can read about it. It's called the Tingo Group. I think it's a cell phone company in Africa, I think, or something like that. Oh my god, it was a huge scam. I don't know how investors eat that garbage. I don't know. Like just think of it, guys. Like these investors and hedge fund managers, they are supposed to be the smartest people out there, and they keep just getting hammered one after another, falling for these scams. I don't know how. They're supposed to be like the savvy people in trading, and they just are worse than us. They're the ones that get us in this garbage. Okay. Anything else, guys? If anybody has any questions, again, if you can jump in Discord or anything, you're more than welcome. Let me know. I guess somebody asked me about what I think of IMNM for holding for Monday. I don't think I'm gonna be here Monday or Tuesday. So as you see, guys, if we're gonna play this stock, it is holding pretty well this trend line. Whenever the market opens, we're gonna see. So now you have to test the 710, 740 area. I think if it breaks this one and break this one, it's gonna go. Probably gonna go. So I'll watch for that. I'll watch for the trend line. So you your trend line and this. If you want to enter, take a risk here on Monday. That's your trend line right there. Just follow the trend, and you can take an entry here with the stop loss to here. Like, yeah, it's worth it. Yeah, yeah, it might be playable on Monday. I'm not gonna be here to play it, unfortunately. So I'll try and see you guys another day. I'm probably gonna see you on Wednesday. So I hope you guys all make money this week. And I guess we have no more questions, so I can call it a night. Since you guys all are, I answered all your questions here. Yes, I don't have any questions. Let me check the Discord. Yeah, nothing on the Discord either. Okay, guys. Well, enjoy the rest of your weekend, and thank you for being here. And I'll see you on Wednesday when I come back. You're welcome, Lunatic. I appreciate it. Thank you, guys. I'm gonna try to post this when it's done on YouTube, so it might be a day or two if you want to subscribe, and it will be there for you guys. Thank you, guys, and enjoy your weekend. See you later.